From the morning reading, over the past 3 days, there have been a significant number of stocks in the S&P 500 that have reached both a 52-week high or a 52-week low. The other times the index has seen this kind of behavior, it has led to weakness in the months ahead. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:27 a.m. Central Time, and I am recording this in preparation for the market day of July the 22nd, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So, what happened in the overnight? Well, a little bit of weakness, mostly driven by earnings releases. Obviously, Apple, the big one, and the NASDAQ, and indeed the NASDAQ's down over 1% at the time of this cut. The other indices are down about a little less than 0.5% for all three of them. Crude oil down over 1%, euro down about 0.16%, bonds up about 0.16%, and gold down about 1%. Gold continues to show pronounced weakness. In overseas action, China up marginally about 0.2%, Hong Kong down about 1%, Japan down over 1%, Germany down about 0.4%, and United Kingdom down about 1%. In terms of macroeconomic reports for today, really the only thing is existing home sales and crude oil inventories. For tomorrow, you have your usual weekly stuff, unemployment claims, and that seems to be about it. So pretty quiet week, really all week, and indeed Friday brings nothing other than flash manufacturing PMI and new home sales. So a very, very quiet week on that front. Obviously offset by a lot of earnings reports coming in. In terms of volatility, short-term VIX is now 11.32. You notice the skew right at that 125 caution level. IV percentiles, SPX 6, 9, 16, and then Dow at 21. Only one standard deviation move was put in yesterday, and that was on the Dow. I suspect this will change today. We'll likely get some additional volatility, especially in the NASDAQ, which has been really very, very, very much a mover of late. Look at all these days with more than one standard deviation move, and even with two standard deviation moves. So NASDAQ's likely to continue that trend today with these earnings announcements that came out overnight. In terms of a regular daily report, pretty much the same. Still phase 2, trend breaking, looking for that higher swing low. IBD status confirmed uptrend, though the accumulation distribution is pretty poor at a D+, NASDAQ at a C+. GMI index also a perfect 6 out of 6 with a buy signal. No change on our decision point from stock charts. Mostly green arrows here, though we're still lacking some PMO signals. Position sizing is both 100% on the investor position sizing as well as the active trader based on volatility. Market posture, very bullish. S&P well up over 80, Dow over 80, NASDAQ over 90, though that one's probably going to take a hit today. Bearish, though, on the Russell, which continues to concern us. Hedge warning status still remains a 0+, normal with cautionary aspects, and those cautionary aspects include the fact that we have 5 distribution days on the S&P. Skew, I already mentioned about this being right at the 125. Also, the New York Stock Exchange new high, new low, over 400 new lows put in yesterday. That continues to be a concerning trend day after day with what we're seeing there. Very, very weak breadth in the current market. In terms of the risk aversion indicators, 3 are risk on, 1's neutral, 1 looks to be rolling up. So mostly these have been improving, but no changes yesterday. Also no changes with respect to the current special opinions, option income strategies. VIX is inside the acceptable window. If anything, it's actually about ready to drop out of the bottom of that window. So kind of can consider the potential for increasing volatility. Cover call conditions are acceptable. Consider a 1-to-1 distribution. Obviously, we seem to be near the top of the range, and then put selling conditions also acceptable. But you may also want to consider the individual charts, but also the broad market. And indeed, when you look at this, I mean, the S&P, I mean, pretty classic. We had the false breakout and then the huge reversal back to the top of the range. And then look at this, you know, smaller and smaller and smaller candles, more and more indecision being, and the just classic rollover kind of candle pattern here. So that we might be putting in something of a retracement back towards the middle of the range would not be unsurprising whatsoever. And our sector-specific information, you see pretty much a mixed bag here. And those that are holding up the best, the consumer group and healthcare, financials, and technology, though technology likely to take a hit today. You look yesterday, though, percent change, only energy managed to scratch out a positive day. Everything else was down. Telecommunication down hard, industrials down hard, utilities down also about 1%. So that should do it for today. Pretty simple day, really. Not a lot of significant changes from the day prior. Obviously, this is kind of a continuum. But if you do find what we're doing here helpful to your trading, certainly liking us on YouTube, retweeting us to your Twitter followers or Scott Twits, etc. Scootify, you see our handle there. More information is available about what we do each day in our group at this website. Disclaimers as always. Hit the pause button to review at your leisure. And we'll look forward to seeing you back here tomorrow morning before the market opens with the market preview. Good trading.